Good morning, everybody. It's Chris from Serene Education with the four majors and update for the 16th of October 2013. Hi, guys. Let's have a look at the four majors, starting with the euro against US dollar. Looking at using the FX8 Ultimate template. I've got the charts open on a weekly just to have a quick update midweek. Let's have a look and see what price has been doing so far. You can see quite clearly here on the hard right edge, price for the past month, in fact, has been spending a bit of time above the 50% Fibonacci retracement level here. We haven't been above this level for a long time. In fact, the last time we were above here was back in early January of this year. Subsequently, when we did have that breakout, price failed to actually find support and to kick on back up towards the 61.8 here at the 13,800 mark. Subsequently, a bearish engulfing week followed and took us back below, formed a nice tweezer top here at a resistance level, i.e. the institution as well as the monthly fib, and price reverted to the downside. Here near term, we have a lot of consolidation above this 50% level. You can see I've drawn some horizontal lines here to show you the specific points here where price has been using as a potential target or resistance level support over the past couple months. In fact, first couple of years. But the most important thing over here is clearly the fact that we're actually trading above the institution moving average on our weekly, which is a very, very good indicator of positiveness. We need to now that we're trading above it, we need to now find support above this 50% retracement level on a monthly and use this level here as our intraday support. And then subsequently, if we are to see any further upside, price needs to bounce now solidly on that. We have a lot of indecision candles, if I just zoom in so you can see them. A lot of indecision candles, but the most important thing is it still remains above the 50% retracement. If we do, however, see a bearish engulfing candle close low on the weekly, then subsequently what we should be doing is targeting our institution moving average on that time frame. So we know exactly what is likely to be in the tank in terms of profit. We have roughly 150 odd pips to that level from the break of the 50% level to our institution on the weekly. Okay, that's going to be our clear target, because price will always work its way back to the institution if we do see price reverting or moving towards that level. So going down to our daily time frame. Let's just move it all over. You can see the consolidative range here. You can see intermediately price has failed to make any higher highs, and subsequently we had bearish engulfing candles, which has now forced price lower. A lot of indecision a couple of days ago. Yesterday's candle falling into the 50 period moving percent Fibonacci retracement level here at the 13,4,800 mark, and subsequently bouncing at the end of play. So we had more positiveness. We do have a red arrow, however, but more positive, and you can see quite clearly that price has been using this level over here as a very stable support level. RMO is still above it, however the MACD is clearly below and has been for some time as price has been consolidated. So my long-term sentiment monthly and weekly is still looking positive to the upside. However, now that we're looking at the daily, you can see that the long-term sentiment RMO and my institution moving average is still very much below price, supporting price, as you can quite clearly see. In fact, 20, 50 in the institution all in order, which is a good sign. However, you can see that the linear regression and my R squared are not giving a true picture. Linear regression, we want that to be, at the moment now it's telling it's negative, and the R squared is telling us that there's no true sentiment in this particular, or on this particular time frame. So we want the linear regression to go blue to tell us we are in a positive, we're looking at positive upside trends, and the R squared to complement that to see this really moving forward. So onto our 4-hour time frame. Let's have a quick look at that time frame, and you can quickly see a very bearish engulfing candle a couple of hours ago. That taking us down into that 50% retracement level here at the 13,4,800, as I mentioned. The institution moving average below price actually supporting her, and you can quite clearly see that we're still making lower swings. So very, very important. If this is to maintain long-term positive, ideally we need this intermediate trend to be breached. Ideally we need to see the last prior swing being broken. So price ideally needs to be trading above this current high over here, the swing high, which is at the 1357 mark at least. So if you're looking to trade this and the bias is upside, we do need to see a bullish engulfing candle close higher. We are looking for buying sentiment intraday, but the outcome, if we do see a bearish engulfing candle nonetheless on the 4-hour, would have to take us below the 50% retracement level here, but also the institution. So we have between the 50% retracement on the fib level here to the institution moving average on our 4-hour is a healthy 51 pips. but you're trading with that much risk because price can very much trade into that and then bounce, and then we could have a hammer and then price could revert back to the upside. So primarily, if this is to be bearish long term, got to get below the institution on this time frame, the 1343 and change, and then we could look for further lows, monthly lows in fact. And the monthly low from the institution to that level, you're looking at a healthy 286 pips. So you've got to be very, very you've got to wait for the signal to really come. In this case, because we're looking for long-term trends, is still up, we're looking for a positive bounce. And ideally, the bounce has to be trading above this 1358, the prior swing on the 4-hour time frame. It's got to be making higher highs. If it fails to make a higher high, it's going to be making lower highs, which is what is in favor right now. And if we're going to see that, then we're going to see a reattempt of the 50% retracement level to the downside. Sterling on the sterling on the weekly time frame, you can quite clearly see. I wanted to show you this, guys, because you can quite clearly see since 2012, April of 2012, last year we had a tweezer top here at the weekly fib. Price failed to materialize, and subsequently had a major drop over the couple of months. The same happened here in the latter part of July of 2012. We had a morning star formation at the weekly, and subsequently price fell. Yet some shooting stars here at the weekly level, and price reverted to the downside. Here again, we had a tweezer top just recently, guys, and look what happened. So what are we looking at? Last week we had a fall. So as it stands at the moment now, price could actually, if it really wanted to, drop towards that institution moving average. Each time she fell towards the institution moving average, fell, institution moving average, fell, institution moving average. So that would ideally be our next potential target. So where price is trading right now to that level is a healthy 271 pips and change to that 38.2 weekly fib as well. So if you were looking for any opportunities, you could take the current low to the current high on our weekly time frame. That will give us our daily. You can see the 23.6 is acting as support right now in real term. So ideally we want a daily close below this level, and we do see that, then ideally intraday we should start looking for more negative sentiment, and we should be looking for shorting opportunities back towards the institution moving average. Daily chart, let's have a look and see how this is all panning out now. There we go. A lot of indecision candles. Just recently, the past week has been very, very indecisive. However, you can still see that we're seeing intermediate trends or swing lows. And look where price is trading right now in conjunction to the prior swing, the trend line swing. Excuse me. So if we do see a bearish engulfing candle for price and it takes us below the 23.6 on the daily, then we should be targeting none other than the 38.2 level over here as our next potential target, because that's our price support and resistance level. Below that, back to the 50% retracement level, which will bring us back into roughly around the 50% level, and then 61 complements the monthly 23.6 as well as the 50% on the weekly. So RMO is still positive. You can see that the sentiment over here is primarily driven, is positive, which is important. However, we do have one or two areas on the 4-hour and daily which doesn't really complement it, primarily because we are consolidative. A lot of indecision candles. We want to see a decisive candle. And if you're seeing a lot of indecision on the daily, then that must tell you we need to see a decisive candle on the daily. So here again, if you're looking for an opportunity, we want to see a bullish or bearish engulfing candle to give us that signal. US dollar Swiss franc on the weekly. Notice the institution moving average, guys, on the weekly, pretty much capping price. We've been in a very, very negative trend. Look at the monthly and the weekly. It's pretty much telling us we're looking at long-term negative sentiment. The institution moving average a couple of times has been breached back here in 28 resistance. Another breakout here in 2010, which failed to actually find support and kick on. And each one of these, we're waiting for the pullback candle, and then the support candle, the continuation candle, to confirm the breakout. That never materialized, and subsequently prices fallen over. Another reattempt here in July of last year, and a couple of attempts this year through March, June, etc. And you can quite clearly see, if I just move to the hard right edge, we had a breakout, a pullback candle. Everything was looking fantastic. However, you can see the monthly 23.6 price fell to actually find support above it and kick on. So the monthly here, as well as institution, acting as a clear resistance near term, and in doing so, still forcing price or the US dollar Swiss franc lower. Okay, swing lows depicts downside movement. Arrow, candle, RMO, OSMO, all below on my weekly, looking negative. Okay, the only thing we've got to really worry about is this consolidation area over here. That's happened just recently. Price is trading at the underside of it, so now we want this area over here to act as a very strong resistance level intraday. So we move down to our daily time frame. Let's have a look over here. So you can see price is consolidated at the underside. The last daily candle, indecisive, still red. Okay, RMO is still below, the MACD is clearly above, but we want to see a more bullish engulfing candle. This is to be a genuine sentiment candle. We do have intermediate level highs, swing highs, which is what we're seeing on the euro. So we see the total opposite on the US dollar Swiss franc. So what we're looking around here is a positive candle. It's either going to be a bearish engulfing candle because the long-term sentiment is negative, or we're going to see a bullish engulfing candle, which is going to take us above this current consolidation area that we've seen just recently, and that would mean we should be targeting back up towards our institutional moving, which is going to be our 50% retracement on our weekly as our initial target on the daily. For our, you can see quite clearly we have a lot of positive sentiment intraday, but our institutional moving average is still above price. That would mean that that area would either be a potential target or resistance. So you can quite clearly see now on the 4 hour, we had a nice juicy breakout of this consolidation area here, the resistance level that we've seen over the past couple of days. A bullish breakout with the candle, RMO above, Osmo indicator above. However, the institution moving average on the 4 hours capped price from moving any higher. Daily, we wanted to see a 4 hour candle close above the institution on this time frame. That would have given us a clear signal we should be looking long term up towards these levels. However, the good thing is, though, it is still spending more time above the prior resistance level. Okay, so now if you can find a nice bullish engulfing candle on the 4 hour, ideally above the institution, then you should be looking for nothing more than upside. Okay, because price is making intermediate swing highs, and obviously all the 5, 15, and 30 minute will start going positive, and then we can start looking towards a trend line, but ultimately back up towards our weekly, on our monthly, above the institution to that level, you're looking at a healthy 211 pips. So on the 4 hour, looking for a comfortable break and close above this 91.86. In particular, the institution moving average to get that clear signal. So we want a 4 hour candle close higher than this, the hourly candle close higher than the 4 hour candle close. That would come with a lot of sentiment, and that would dictate we should be looking for nice, easy profit, or potential strong sentiment moves to the upside, which is going to be our weekly fib 50% level here as our initial target. Last bit of the day, US dollar, Japanese yen. Here on the weekly, you can quite clearly see that we've been on a very extended uptrend through September, October, right up to the April highs. However, since then, price has been very, very consolidated. In fact, in a wedge pattern. Higher highs, getting lower, lower lows. Sorry, not making any lower lows just recently, and also unable to make any higher highs. So we get this squeeze pattern over here. You can see that the candlesticks on our weekly are still very much positive. We do have a red arrow, however. The RMO is still very much above, but you can see as we've been moving in this consolidation, the MACD has clearly told us we're not seeing any further positiveness because it's consolidative. So obviously now we're trading within a wedge formation, and now we should be seeing something. Depending on how things go tomorrow in terms of the Fed debate, ceiling debate, do we come up, are they going to come up with a plan? Is the government going to come up with a contingency plan for that, as well as the Fed shutdown, the government shutdown? It's also very, very important. Loggerheads at the moment, and subsequently price is starting to feel that. Going to the daily time frame, you'll notice that price is trading below the monthly fib. So ideally what we should be doing, if it's trading below the monthly fib, then it's likely to target the next level low on the monthly fib. But you can see that the weekly fib level is also below price. The institution moving average has been support over a number of months, but we had a breakout, and then price has been able to catch that back again. So it needs to stay above the institution moving average to start with, and you can see that the candlesticks are still red, so a lot of indecision here. I'm not trading this particular pair at the moment now because it's trading within a wedge. I want to see a more defined move from the market, ideally above the monthly high. Fib level here would be far better to look for topside, and below the weekly fib over here to the downside for looking for shorting opportunities. Okay guys, that's it, short and sweet. Please, if you are using this template or any of the Serene Education templates, back it up with sound money management, guys. If you are interested in getting your hands on this particular template, please email us at info@sereneeducation.com. The email address will be at the end of this video. Other than that, I can leave you with it. We are Wednesday. Tomorrow is the most important day. We're expecting news on the actual Fed ceiling debate. The Fed, the American debt ceiling issues they're having there. We should be getting some sort of some outcome regarding that. We do need to see something, otherwise we're going to start seeing a default for the US market, which is likely to occur. But you know, the Americans traumatized, take it to lastminute.com. It's inevitable. A lot of news out today for certain pairs. Please be aware of that to see how price is actually going to factor in with a lot of this news outcome. We have this afternoon, in particular, we have the beige book, and we have the FOMC member George speaking. This morning for Euro, as well as Sterling. Claremont count change figures for Sterling, unemployment rate figures for Sterling at 9:30 a.m. GMT. Then we have Euro CPI, inflation report, core inflation report, year-on-year figures. So very, very important news for both the Euro as well as Sterling this morning. Be aware of it, factor it into your trading, and just keep it as simple as possible, guys. I'll leave you to it. I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.